guys, welcome back to our channel. It's the Parent Entrepreneurs here. So today we'll be continuing our series on investing with Mac. So we will go over key terms in the stock market and how to invest and even our trading, right? So if you have not watched the previous video, I highly suggest you watch it. So please go watch it now so it all makes sense. So I'll be focusing on high risk investment or trading specifically on the stock market. So as a disclaimer, I am not a professional financial advisor, so this is just for educational purposes only. So if you are looking for financial or professional advice, then I highly suggest to go out and seek for a registered financial advisor. Okay, all right, so let's get started, guys. Alright guys, so I'll be going over key terms that I think that is very important when investing or trading in penny stocks. So what is penny stocks, right? So penny stock trading is basically a game of trading stocks that are under $5 a share in pursuit of profits. So the main focus of trading in penny stocks is riding the momentum, the hype, guys. So remember, always follow the hype, follow the patterns, so to get the maximum profits. So just like what I did when I invested in or traded in the marijuana companies before legalization, there was a lot of hype, man. It was crazy. So a quick background of Bill C-45. So it was introduced in 2017 to the parliament on April 13th and was legalized on October 17, 2018 in Canada. So I'll show you guys a photo of the penny stock that we rode the wave and cashed out once we made 100K in that single stock. So in 2017, the stock here, it was at 20 cents, then it shot up to $4.40. So it was incredible to see. Never seen anything like that before. But the lesson that I learned is learning to ride the wave, the greater the profits. So just remember that. So you gotta learn how to ride the wave, because if you do, you're gonna make a lot of money. I tell you that because I like it happened to me, and I'm sure it's gonna happen to you if you focus and understand that, right? So the second thing that I want to talk about that a lot of people ask me is, how does a penny stock go up or down, right? So it's a basic concept. So it's basically supply and demand. So the more buyers than seller equals higher price, right? So more buyers than sellers equals higher price. More sellers than buyers equals lower stock price. So that's how it works, right? So more sellers equals lower stock price. Okay, so think of it when you are shopping for a new house or a new home. So in a seller's market or a hot market, you see a listed price, for example, of 490K. Then other people that are interested are bidding higher than the listed price, which in this case, is 490, right? So maybe that buyer, the other person, wants to buy the house for 495K, but the listing price is 490. So now the buyer is willing to pay a little bit more, so 5K extra. But for example, you really want to buy the home, so let's say to the seller, instead of me competing with other people and going up by 1,000, 2,000, 3,000, I'll give you maximum 500K for your home right now. And let's say the seller agrees and you agree as well with that price, right? So the transaction is completed once both parties agree. So the perceived value of your home now is 500K. So it's similar to the stock market. So when there is a hype or a hot market, like what I was talking about in the home there, the home analogy, so buyers are willing to pay more because they are confident that the price of the stock will be higher in the future. So kind of like when you buy your home. So let's say it would be an investment home and you got the house for 500K. So maybe in 20 years from now, you can see a return of maybe close to double, right? So kind of like the same thing in the stock market. So that's how it all works. So that's number two that I wanted to talk about. So we'll go to the next one. All right, guys, so the third thing that I want to talk about is what is ask and bid price. So this is very common, and you'll see this when you have your investing account already set up and you have level 2. So level 2 is basically a way you keep track of how many people are wanting to order or how many people want to buy or sell their shares, right? So that's called level 2. So it's very comprehensive. But anyway, so just remember, bid price is what the buyers are willing to pay for that stock, right? So bid price is what the buyers are willing to pay for that stock. So ask price is what sellers are willing to pay for that stock. So let's say, for example, you bid for a penny stock of 20 cents, right? Then the ask price of somebody selling the stock is, let's say, 23 cents. So somehow you guys have to negotiate, and let's say, you know what, you're like, okay, 23 cents, is what they're asking, and I'm bidding 22 cents. And for me to negotiate or complete that transaction, I'll go up to 23 cents. And once you negotiate saying that 23 cents for that specific stock that you're trying to buy, then boom, transaction is completed. Then now you own that shares, right? So that's how it all works. So ask price, bid price. So also, you'll see this once you have your investing account, you'll see like a buy button and also a sell button. So a buy button or a buy term means buying shares hoping for a rise of the stock price. So buy term is buying shares hoping for the rise in the stock price. So how about the sell term? So usually what that means is you want to sell your stocks because you're thinking either the stock price might be going lower and you want to cash out and realize that profit, right? So that's why it all means buy button and sell button. Those are the two terms that you probably want to get familiarized, especially when you're starting out, because you're gonna see those buttons when you start buying and selling your stocks, right? Especially penny stocks. All right, guys. So the next thing that I wanted to talk about is a market order. So what is a market order? So a market order is placed to trade a stock at the current market value. So what does that mean? So an example of that is you think about this. So let's say somebody is asking for $1.20 per share, and for you, you don't know, or you want to get filled right away for that specific stocks because you want to get right away. So you would buy a market fill so that you can get that shares right away instead of waiting around so that you guys can negotiate a price. So a market order is what that means, is where you order a stock so that whatever asking price the stock is, you get right away, right? So that's what market order is. So the next thing that I want to talk about is a limit order, and you'll see this when you're buying your stocks. You'll see all these options. So a limit order is when you order a place to trade a stock at a certain price specified by you or by the client, right? So a great example of that is, let's say the market right now, the market value is $1.20, but you don't want to pay that much, and you want to get in at $1 mark of the $1 mark, right? So what could happen now is that maybe down the future, or maybe in a few days, that you think that the value of the share price will go down. So what you can do is you can place a limit order so that when it hits $1, then it would fill your orders. So let's say it goes from $1.20 one day, then the next day it goes to $1.10, then the other day it goes to $1, then boom, your order is filled, and that's when you'll get your shares. So basically that's what a limit order is, and most of the time this is what I use, because the market order, usually when you do that, it's kind of like of a FOMO, and I try not to have the FOMO, because if you have the FOMO, the fear of missing out, then you make illogical choices. So I'll talk about that in the next videos and the following, because that's very important to have that kind of mindset and to have a setup where you're not gonna fall into FOMO. All right, so we'll go to the next one. So you're gonna hear this very often, especially in billboard or those forums and stuff like that I'll be showing you guys in the future. But people are gonna be like, you know, are you a bull or are you a bear? So what are bulls or bears? So bulls are wanting the stock price to go up. If the market is performing well, many people will refer to this as a bull market. So let's say a bear market now, right? So bears are the ones that want the price to go down, so the stock price to go down. Normally this happens in a recession in the affected market, or stock price decline in value is called the bear market, right? The next thing that I want to talk about is fundamental analysis. So what is that? So this is normally used for long-term investing, and we're not going to be doing that for the series because we're going to be going on high risk investment account, so to maximize our profits at a very short amount of time, right? So investor look at the financial statement of the company and valuation to determine if it's worth investing, right? So this is mostly used for long-term investing if you want to do fundamental analysis, because you're looking at, you know, financial statement and stuff like that. So that's very, very important. So now the next thing that I want to talk about, and this is going to be what we're going to be doing for this series, is technical analysis. So this is heavily used in trading. So traders look at the stock price action and chart patterns to determine when to jump in and cash out. And this is what I've done in the past to maximize my profit and turn, you know, 10k to 100k at a very short amount of time, because I was studying patterns that happened in the past and saw the same pattern, and from there I was able to jump in, and once I was able to jump in, make a lot of money, then cash out, because I knew that pattern was gonna go up then eventually come down again, right? So hopefully that makes sense, guys. And if you guys have any questions, please comment down below or direct message us. I'm willing to help you guys out. And if you know, if you have any more questions about what I talked about today, just let me know, and hopefully I can see you guys in the next video and you guys start investing, because if you start investing now, time is on your side and you can make a lot more money, and the skills that you're gonna be learning today, I mean, it's gonna be invaluable in the future, right? So hopefully you guys learned something new again, and we'll see you guys at the next video.